Good morning, everyone, and welcome to our latest town hall. We've got a really important topic for you today, navigating government measures. As you know, there have been a number of different announcements made by the federal government in the past several weeks and a number of changes to some of those programs. So it might be hard for people to kind of catch up with the current status of things. So we thought this was a really important topic that would be able to provide a lot of benefit to you. So thank you very much for joining us today. So we've got our friends with Grant Thornton who are going to be presenting. We have Laura Morgan, who's a director in transactions practice from the Vancouver office, as well as Phil Ross, who is the tax service line manager for Grant Thornton's South Coastal Business Unit. So we're very happy to have them present today. A couple of quick housekeeping notes, though. So first of all, if you have any questions, we encourage you to ask questions. We will answer all of them, even if we don't have a chance to get to all of them today. But please post your questions and comments off to in the chat box off to the right. And Tanya is going to be moderating the call, and so she'll be able to pick off some of the questions that she sees and ask them of the panel at the end to make sure that we're addressing them. But we will answer all the questions. We'll be posting them on our new website, which you have, and Sandra, of course, will be posting that later, where we're posting regular updates. We also have our forums and a job board. So we have a number of different activities going on to kind of support companies through this time. Also, a couple of cool things, non-COVID-19 related. First one is our BC Food and Beverage Awards nominations is going to be opening on April 21st. Sandra will actually be posting the link. There we go. There's the link. We actually have a dedicated site for that. That Kelly put together from our team. So anyway, on the 21st, you can actually go to the website, but you won't actually be able to start to do any nominating until April 21st. So we're really excited about that. There's so many exciting things and so many exciting stories to share. So we'll look forward to kind of seeing some of the nominations that come in. There's so many deserving people. We're also doing our wage survey again. And that'll also be coming out. Participants can save. You can get the results by participating in the survey. You can save quite a bit. So we'll have more information provided on the link that Sandra's also provided. Thank you, Sandra. It's almost like you know what I'm going to say in advance. It's amazing. So good. So with that, on with the show. And I'm going to pass over to Laura and Phil. And then Tanya will join in a little while to moderate with the questions. So I'll hand it over. Thanks, Laura and Phil, for joining us today.
Here we go.
Everyone can hear me now. I was bragging about my technical competence a little earlier, so pretty funny. So thanks for having us, everyone. And you know, the COVID has really thrown the world a curveball, and I'm pretty certain that none of our disaster recovery plans really anticipated this. And so in reality, though, the government has been, to their credit, has been pretty quick to respond, announcing a lot of programs to help support businesses and their employees. And so what we're hoping to do is go through each of these programs in a pretty high level, and we've got a limited time frame, and there's a lot of detail here. So we're going to move at a pretty quick pace and hopefully stay in the areas that are probably most relevant to you. And when I look at these programs, they really break down into 4 categories. There's wage support to businesses, there's cash flow support to businesses, there's a bunch of due date deferrals and tax payment deferrals, and then there's income support to employees, and we'll discuss each one in turn. And if I can get this survey off my screen, I can, there we go, control the screen. So let's talk about some wage subsidies, and there's really 3 of them that I'll talk about. One in particular, and I would caveat a lot of these conversations that the group has been working on this slide deck over the last week, and we've been in constant revision mode as they announce programs, pass them into law, revise programs, and adjust them. And so these programs are very much a work in progress, and some of the slides actually reflect that, because we've written slides last night and there's been new announcements this morning that we hope to speak to and maybe ad lib a little bit. But the first program is the Canadian Emergency Wage Subsidy, and I'll call that the 75% subsidy for ease of reference. But this is the most significant program for support, and it's also the most complicated. And so when I look at this program, bear with me. So what is the basics of this program? It's a 75% wage subsidy up to a maximum of $847 a week per employee. There's no maximum on this subsidy, being regardless of how many employees you have, you can claim an $847 a week subsidy for each employee, up assuming you meet the calculations. This is the subsidy has to be applied for each month that it's in that you're eligible for it. And one of the nuances of it is that you need to pay the wages, apply for this support, and then wait for the check to come back. And I'll talk about that time frame a little bit, but that certainly is a cash flow issue. So who can apply for this? It's a very broad group that can apply for it, but most corporations that meet the revenue drop tests, most corporations qualify. Canadian corporations, we believe foreign corporations with operations in Canada, foreign controlled corporations. So it's a pretty broad group that this applies for, and that's by design. The biggest conversation piece, one of the biggest conversation pieces, is the revenue test. And so in order to qualify for this, you have to have experienced a drop in revenues. And for March, and it's a 3-month window here, for March it's a 15% decrease, but for April and May it was a 30% decrease. And when you think of the original announcements, that there was originally a 30% decrease in March, and they realized that people's revenues hadn't necessarily declined at the beginning of March, and so they reduced that threshold. And so you've got a 15% threshold and then a 30% threshold. For qualifying revenues, you see that qualifying revenues all over the slide. Qualifying revenues is defined in this legislation, and it includes cash or consideration received in the course of ordinary activities in Canada. And it's a very ambiguous definition, and we're still trying to understand what that really means. And I suspect the government will clarify this, because it is earned in Canada. Does that mean that you're actually physically present in Canada? Is that where your customers are? Is that where your employees are? It's not quite clear. And it also talks about ordinary activities. And so there is an ability to normalize your income if you've got odd events, you get a big gain in a year, or you recovered on a big bad debt. If there are spikes in your revenues, there is an ability to normalize your income if you have unusual events happening in these periods that we're going to talk about. When looking at this revenue test, there's also some other nuances to it and alternatives. You're able to use a cash or accrual accounting in determining this qualifying revenue. Now, all of you will be using an accrual accounting system. So I suspect what you will be doing is using your normal accounting approach, determine if you qualify. If you do, you run with it. But if you don't, you do have the ability to look at a cash basis accounting to determine qualification for this, because a lot of times if you're using cash, if you're billing, you may not be receiving that cash, and you may be able to exclude that revenue from this calculation of the current period and actually get into it when your accrual version doesn't actually get you there. Another interesting nuance is if you have a corporate group of multiple companies, you can calculate your revenue on a per entity basis. And if you think of a larger group, you might have some companies that don't qualify because your revenues are just fine, which is common in the food industry, or you might have other companies where your revenue is below this threshold and you qualify. So you can calculate it on a per entity basis, but you also have the ability to calculate it on a consolidated basis. So if you're normally accounting on a consolidated basis, you might be below that threshold of 15 or 30%. but you actually, on an individual basis, some of those companies may not qualify. And so there's two alternatives there. And if you have companies that are falling out of the revenue test because on a standalone basis they don't qualify, they might qualify under a consolidated approach. Some of the original proposals actually excluded non-arm's length revenue, which was an oversight by finance. And they actually listened, and now there's some inclusions for arm's length revenues, because there's a lot of companies that are set up to consolidate payroll in one entity and charge intercompany fees that are actually operating the actual third-party sales. And so there's some look-through rules that are available to companies that are structured in that manner. So once we've determined that you've got a current year revenue drop and we understand what your revenue is, what are you comparing it to? And so there's, again, two alternative methods. First method being a month-to-month calendar year comparison, so March 2020 compared to March 2019, same with April and May. Or an alternative approach is to look at March 2020 against the average of January and February 2020 revenues. And again, this is to crop in entities that may have been excluded if you just looked at last March. And so high growth entities may have been excluded because while their revenues have been detrimented currently, they may have been on this high growth curve. And so you're able to look at January and February, which is a closer comparative, and maybe you fit in under that. So I suspect most people will, with sort of current or established businesses, will first look at the March to March, April to April tests, and then see if they qualify. Great, they use that alternative, and if not, you default to that second alternative. But once you make a choice, you can't go back. So now we've figured out that you qualify, you've got your dip in revenues, you've got your comparison. How do you calculate the actual subsidy? And this is a complex definition, and I almost apologize for putting it up there. But basically, you've got two periods to look at: your current pay period and your pre-crisis remuneration period. And so you're able to claim a subsidy on the greater of your current pay and your pre-crisis pay. And you might say, well, why is that relevant? It's relevant because if I'm an employee making, let's say, $1,000 a pay period pre-crisis, but I'm hourly and I'm now in a situation where my hours are being significantly cut back, you can base the subsidy on that pre-crisis higher wage rate. And so what you might find is that if people are earning a little bit less in this period, in the crisis period, you can actually get a higher percentage coverage than that 75%. And it brings up an interesting calculation. This is a per employee test. So every employee, you have to go through this calculation and understand where they fall. The 847 actually equates to a $58,700 wage or annual salary. So anybody at or below that you should be able to get a full 75% or more subsidy. But if you're higher than that, you're capped at this 874. So it brings up an interesting scenario, though, where if you have a significant reduction in your activity levels and you can't keep people busy, there is an option here where you can look at your pre-crisis salary and have people consider a paid leave and basically stay at home and earn 75% of their pre-crisis wage, assuming they're below that $58,000 annual salary. You can get the wage subsidy and they can earn 75% for staying at home on paid leave, and you'll get a full 100% coverage on that wage. There's also some sweeteners to that, in that the CPP and EI, the employer portions, you'll get 100% coverage on that as well. Special rule related to owner managers, and this is a sort of a don't game the system rule. So if you're an owner manager that's been living on dividends and you say, geez, during this crisis, I'm going to pump up my my salary and get this benefit, they basically say, look, if you weren't on payroll before, we're not going to give you the benefit now, because you can't, so you just can't create payroll to an owner manager. Another nuance to this is that the pay periods that you claim the subsidy on don't align perfectly with the March, April, May month ends. They're actually staggered. And these are, so you have to look at your pay period from March 15th to April 11th to determine your subsidy for March and April and then May. So they're staggered periods. So once we've determined you qualify, we've calculated the subsidy, how do you go about applying for it? Well, this is not up and running yet. CRA has not got the infrastructure yet to actually manage this, but the information we have at this point is that you will file this on under your My Business account, so your individual corporate My Business account. What we're finding is a lot of our clients don't have this set up, and so we're helping assist getting this set up. It can be difficult because if you don't have it set up, it takes time. And so we're suggesting all these clients get moving on this My Business account. We're hopeful that CRA has also suggested that this may be there might be a web-based application that you can go and apply without your My Business account. And we're also hopeful that our representative client that the accountants have can actually go in and do this for our clients so we don't suffer any delays. Finance has suggested this might be a 2 to 5 week window before this is up and running. So in conclusion, or sort of some other considerations, understand that finance has been very clear that there are severe penalties for people found trying to game this system by creating payroll, playing games with their accounting approaches. So be forewarned that the penalty, I think the penalty proposed is 225% of the subsidy. So that could be a very, very expensive way to access some cash flow. Consider the paid leave scenario. It seems to be a very lucrative approach to having people stay at home, get 75% of their wages. That's a better alternative than the CERB and the EI options. Government has suggested that where employers have the ability, they're expected to pay that additional 25% wage for people that are working, not on the paid leave. But if you're working, they don't want people just reducing their payroll to access 100% coverage. And understand that the system's not up and running, that you have to pay your employees and wait for this check to come back. So there is a significant cash flow pinch. So some of you in the food industry may not have suffered this significant downturn in your revenues. So the fallback support here is this 10% wage subsidy. And I'll talk very quickly about this. It is limited to companies that are Canadian controlled companies and eligible for the small business deduction. So it is a small business type program. And it's a very simple program because you basically can claim $1,375 for each employee per pay period, up to 10%, maximum 10% of their gross wage. You basically take your source deductions, your income tax withholdings, and you retain the 10%. So you basically don't send in the source deduction. So it's a very you avail yourself of this program. So it's very, very simple. Understand that there are some concerns in that large corporations that are CCPCs may not be able to access this because they don't have business limit, and where you have multiple entities that have payroll. If you don't allocate business limit to those entities, you may not access the program because you don't have a business limit. But CRA has confirmed that we can actually go back and amend those allocations of our business limit to create that business limit for those companies. So we should be able to get there. The overlap of the program, some of you may have already been claiming this 10% wage subsidy. If you're wanting to transition to the 75%, you basically just deduct the subsidy you've already received from that 75% subsidy. And last thing on this is WorkShare program. This is a pre-existing program that is available through Service Canada in conjunction with the employee and employer, where they can agree to go to a reduced work percentage of work, so go to a 50% or a 40% or a 60%. That does not result, so you continue to work, you continue to earn income, but you can be on EI at the same time, and it does not result in an EI clawback. It's a pre-existing program. It is more cumbersome, it's more difficulty to actually apply for it, but once you're up and running on it, this could be a good program that already exists, but it's a little bit more work to get yourself into it. I'm going to zoom over some of these work sharing program slides. So I'm going to flip this over to Laura now, and I apologize if I'm running a little long, but over to you, Laura.
Okay, can everyone hear me?
We can.
Perfect. Just wanted to make sure I wasn't Phil. Okay, so for businesses, there are some specific measures that have been put in place to allow access to credit that will help businesses out in the current environment that we're dealing with. And those fall into three main categories and a little caveat at the end for the Can Export program. So there's the Canada Emergency Business Account, or CEBA. There's the Business Credit Availability Program, or BCAP, and there's the Farm Credit Corporation COVID-19 Support Program. Looking at the, looking specifically at the CEBA, its purpose is to provide support for small business owners to meet immediate cash flow needs. So this is meant to help you if you have to pay rent, if you have utilities, if you have amounts that you have to flow out that you cannot defer. That's what this is meant for. And a total of $25 billion in funding has been promised for these business account loans. So what we know so far is that up to $40,000 is available per organization. It will be a revolving line of credit until December 31st of 2020, at which point it will convert into a 5-year non-revolving term loan that matures in 2025. It's interest-free until January 1st, 2023, after which interest will be at 5% per annum. And the key part to understand about this is that if you repay 75% of the original balance before December, or on or by December 31st, 2022, the remaining 25% will be forgiven, up to a total of $10,000. So if you take out the full $40,000 and you repay $30,000 of it, you effectively get $10,000 for free. So it's a pretty good deal. And who's eligible to apply? So this is specifically for small businesses, not-for-profit organizations, and registered charities. The organization has to have existed before March 1st, 2020, i.e. pre-COVID. And they just changed the next thing this morning. Trudeau announced it, but organizations that have paid between $20,000 and $1.5 million in payroll for 2019. So it previously was the 50 and the 1 million, but it's been expanded because we know there's a lot of businesses who have payroll maybe at $1.5 million, $1.1 million, and they were saying, well, what about us? Or ones where maybe they paid, you know, one person was paid $30,000, and they're saying, well, we're small, we want something to help us too. And so it was expanded this morning. So I would assume the banks will quickly catch up with that expansion, but I don't think they will necessarily have that fixed for today. It is specifically meant for organizations that have had their revenues temporarily reduced and where they intend to continue to operate the business or to resume operations. So if you're looking at your business and thinking, I think I might just shut down forever because of this, this is not what it's not meant for you, although technically you could apply for it. But the purpose is to help you fund your continuing operations. And in particular, it's requires you to apply to your primary financial institution. So you need to have had a business checking or operating account with a participating bank or credit union on or before March 1st. And so that is, if you have multiple accounts, you'll have to figure out which bank am I going to apply to, but it's supposed to be done through your primary institution. Now, one thing to note with the payroll threshold is that currently dividends are not considered as payroll expense under the terms of the loans. So if your corporation paid less than the minimum threshold, which is now only $20,000, so it is significantly lower, but you paid dividends in excess of the $20,000, the corporation would not be eligible for the program at this time. However, we do know that things are rapidly evolving, and it's possible it may be expanded to include dividends to individual shareholders at some point in the future, but for right now, it's not a possibility for that, that situation. Now, in order to obtain the money, the borrower has to confirm some specific things, that it's not part of the government, it's not a government organization, it can't be something owned by the government, and it can't be for someone who's holding political office. It can't be their corporation, and you can't use it for it can't be for a business that promotes discrimination under the standards for that. So you'll have to assert that your business doesn't do any of those things. It specifically states that the funds from the loan shall only be used by the borrower to pay non-deferrable operating expenses of the borrower, including without limitation, payroll, rent, utilities, insurance, property tax, and regularly scheduled debt service. It may not be used to fund any payments or expenses such as prepayment or refinancing of existing indebtedness, payment of dividends, distributions, and increases in management compensation. So you can pay your owner-manager compensation, but you can't increase management salaries by using this loan. And so the process to obtain the loan is actually extremely easy. You go to your primary financial institution's website. They will have an online application. It takes about a minute to fill out. You click some assertions at the bottom, put in your name and contact information, and submit. The bank will review the application, and the Export Development Canada is actually working with the banks to help the government to process all of the applications that they're receiving, because they are receiving quite a few applications. The application process, I believe, went live at some banks late last week, maybe Friday. So and people have already received funds into their accounts. So if you're approved, the money will immediately be deposited directly into your business bank account. So it's very fast process. I see there's a question about, can you use it for paying your accounts payables? Of course, if it's in any of your payables that are in the normal course of business, you can use it for. What they don't want you to use it for is to get another loan and use this loan to pay the fees for the new loan, that kind of thing, or you're going to suddenly pay dividends to the owners. That's the kind of thing they're trying to restrict. Can you purchase new equipment or do business upgrades? My understanding is yes, you can. You can use it for whatever purpose is part of the operating nature of your business. Next one. Just one sec here. So it's this, just to keynote with this program, it's not being run by BDC or EDC. The CEBA program is being run through the financial institutions. The EDC is merely helping the Canadian government to facilitate the processing of the loans, but it's really between the Canadian government directly and the banks. So if we go on to the next program, and this is the more significant program, the Business Credit Availability Program will provide small and medium enterprises with working capital, operating credit, and cash flow term loans. $40 billion in funding has been promised for this program. So 20 billion of that is through Business Development Bank of Canada. It involves payment deferrals, working capital loans, and co-lending. And 20 billion is available through Export Development Canada. And that includes loan guarantees, export guarantees, and credit insurance. The nice thing about this is these programs can be stacked to access up to $12.5 million in additional liquidity. So in terms of the working capital loans, what we know is that this was sort of an existing program that BDC already had, was working capital loans, but this is an expansion of that program specifically under the BCAP. This includes loans up to $2 million for 3 years. They're interest only for 12 months. And the terms are generally roughly market rate. And they do require, for most BDC loans, they require personal guarantees from the owner of the business. They generally, if you are not willing to sign a personal guarantee, they don't want to talk to you. They are taking on a significant amount of risk in taking many of these positions, and they want to make sure that the owner of the business feels incented to repay the debt. These loans through the working capital program are underwritten and funded directly 100% by BDC. So the application for this would be directly through BDC. This program is up and running already. And they do understand that in terms of the GSA that they'll require, that most companies will probably already have a GSA of some sort with their primary lender, and it's fine for them to be the second GSA. They understand that that's normal for this type of loan. The next program is the co-lending program. So this is sort of the big new one that's come out. And what this is it's up to $6.25 million. The eligible amounts are tiered based on company revenues, and it's really important to understand that, because while everyone's getting excited about $6.25 million, that amount is not accessible for most businesses. So the tiers are $312,500 to businesses with revenues less than $1 million, up to $3.125 million for businesses with revenues between 1 and 50 million, and the up to 6.25 is only available for businesses with revenues in excess of 50 million. So understandably, most businesses are not going to be getting the 6.25. Most businesses in BC are probably sitting somewhere between the 312 and the 3.1. So this program is designed for both existing and new clients to BDC. So anyone can apply for it. At this point, there's still some terms that are not 100% clear. We understand right now it should be a 10-year term. It's interest only for the first 12 months. And then it will be based on the operating lender's assessment of the underwriting risk and risk rating for the business that they're lending to. It's not clear what specific security will be required, but is likely similar to what the bank would normally ask for a 10-year term loan. In terms of the process of obtaining it, one thing to note is that when you have co-lending with BDC, because BDC is lending their own money, and in this case, it's funded 80% by BDC and 20% by the bank. So if you were to get $1 million, 800,000 would come from BDC, and 20 would come from, or 200,000 would come from the bank. In this situation, what can happen is that the financing fees may end up being more than you would otherwise have if you just got $1 million from the bank, because BDC undergoes its own financial due diligence process to assess the risk for the loan at the same time as the bank. They don't rely on the banks, they do their own. So you end up kind of with a doubling of fees, but you may be able to access funding that the bank would not be willing to give you otherwise. So you kind of have to weigh the cost with what you might be able to achieve. And that program is not completely operational yet. I think people are talking to their financial institutions. The financial institutions are in communication with BDC about this, but the final details have not been completely worked out yet. I think it's expected to come in the next week or so, from my understanding, but obviously things change. It could be sooner than that, or it could be later, but they are working to get this up and running. The way that you would apply for this would be through your financial institution again. So the next program are the loan guarantees through EDC. So the EDC has always focused on companies that have at least 15% of their revenues from exporting products out of Canada. Their mandate has now been changed to include non-exporting companies. So if you keep all of your revenues are coming from distributions in Canada, that is still fine, you can apply for this. So the EDC is doing loan guarantees on new operating credit and cash flow term loans, again, up to 6.25 million. I spoke with someone from EDC yesterday, and he said they do not have tiering the same way that the BDC does for their loans. So it's really based on what the lender is willing to loan you. So the guarantee is up to 80% of the lender's loan. So if it's they'll guarantee 5 million if the loan is 6.25. Oh wait, they'll guarantee up to $5 million for a $6.25 million loan. So with this, it's really more about what is your lender willing to give you, and you'll have to have those negotiations with them, and then they will go to the EDC and say, hey, we're not comfortable taking this whole thing on. How much support are you willing to give us? What guarantee would you give us? So with this, the EDC guarantee is a 1-year guarantee with an automatic renewal for an additional 12 months. So effectively, they're only guaranteeing 2 years worth of the loan. The EDC fee is about 1.8% per annum on the portion that they guarantee, and that's in addition to any commercial loan pricing that would be determined by your financial institution. However, all companies qualify for a 6-month deferral of the EDC fee. So you don't have to pay them in the first, you basically double your fee in the latter half of the year, and you don't have to pay any fees in the first half of the year. They've also reduced their risk rating. So they historically have required a B+ rating under Standard & Poor's rating system. And under the BCAP, they are willing to guarantee even companies where they would say the rating is only CCC. The underwriting is provided by the operating lender and provided to EDC with approval. EDC does not do any extra due diligence. They basically, if the bank approves the loan, they will guarantee it, assuming it meets the base criteria. EDC also has some additional programs that they have had in the past, but they've somewhat expanded these due to COVID. So there's the export guarantee program, where they will guarantee up to 75% of either operating or term lending not exceeding $10 million US. And this is based on the risk rating, length of coverage, and required amount of financing. But now this is available to non-exporting businesses, I think, is part of the big change there. And they also have a credit insurance program. And the change for this is really that they will now insure receivables of domestic customers. So previously, they would only insure receivables if your customer was out of Canada, but they will now do it for customers in Canada, and they have a higher risk tolerance, so they're willing to insure more things. And they will also, for a limited time, cover losses on goods shipped. Even if the buyer does not accept the goods, they will still cover that. And so, again, similar to the CEBA program, it's for small and medium-sized enterprises. You have to have existed before March 1st. You have to have a viable business model where you can get financing, but the bank is hesitant about doing so. So you've gone to your bank, you've asked for additional financing, and they've said, we don't want to do this on our own. Then they go to BDC or EDC, depending on which route you want to take, and they would try to get the additional comfort that they need or support from the BDC co-lending to allow them to fund the debt to you. The process is still not defined. So how you get this loan and the guarantee is still being worked out. As I said before, it's going to be through accessing financing from your primary financial institution. So you will need to speak with your relationship manager at the bank and figure out what you need and when you need it. One of the things that we've spent a lot of time talking with the various lenders about is that a lot of companies are not providing sufficient cash flow modeling for the banks to be able to make a decision. So a lot of the time, one of the delays that's happening in achieving financing is the bank says, please provide me with a detailed understanding of what your cash inflows and outflows are going to be for X period. And the clients don't necessarily have the ability to do so. So for that, if you want to facilitate the process, it's really important that you have an understanding of that yourself up front. What does your business need? When is it going to need it? How long does it need it for? When will you be able to start making payments? And going to the bank with that information will allow you to facilitate the process so that the banks are better able to deal with your request on a sort of streamlined basis. The next thing is the Farm Credit Corporation. So they have payment deferrals and new operating lines available to businesses in many industries. Their goal is to ensure producers, agribusiness, and food processors can remain focused on business critical functions during this challenging time. What we know about the payment deferrals is that you can defer principal and interest payments up to 6 months for your existing loans, and you can defer principal payments for up to 12 months depending on specific discussions that you'd need to have with FCC. In terms of the new operating lines, there's up to $500,000 of revolving operating lines available for 24 months, interest only for the 24 months, but the balance must decrease to 50% of the authorized amount once per year, and you can repay or refinance at the end. The pricing is prime +1. There are no fees associated with it. They still require a GSA and a personal guarantee, but it's all through Farm Credit Corporation. And the corporations eligible to apply, exactly the same, have to be in existence before March 1st. A significant portion of revenue must be from activities involving agriculture or a business related to agriculture, so food processing would count. It is for FCC customers and non-customers. So even if you've never had a relationship with FCC before, you can apply now. It's currently not available for businesses in hospitality, tourism, bars, full-service restaurants, and cannabis. And it's assessed by them on a case-by-case basis, subject to their normal lending due diligence procedures. Finally, I just wanted to touch quickly on the CAN export program. So if you had attempted to access CAN export funding in the past, they have, and maybe you've achieved some of that funding for various programs, they have adjusted their requirements, so there's no penalization for deferral or cancellation of programs for the 2019-2020 year. They are allowing reallocation of funds to new projects without having to reapply for funding. You can contact them and work with them to reallocate the funding to a different project that maybe is feasible, where the one where you were going to be traveling to southern US to tell them about your great product is no longer a possibility. And they will also reimburse up to 75% of trade show costs that have been incurred and are not refundable in cash. So even if for a trade show you got a credit for the next time the trade show goes on or for when they reschedule it, you can apply to CAN Export to have your funding reimbursed for that 75% of your costs. And I will pass everything back over to Phil. Phil, are you on mute?
Why would you ask me that? So thanks, Laura. In the interest of time, we're running a little long here, and I see some really great questions coming up in the chat. We will be sharing a link to our COVID site, and in that link and in that site, there is a complete table of the deferrals available for corporate filings. Oh, there it is right there. And so I'm going to very rapidly pass over the filing deadlines and deferrals. But basically, if you have a filing coming up, there's probably a deferral on it, and so you may not have to meet the original filing deadline for a tax return, an election. But more importantly, the due dates of your taxes has been pushed back for a lot of filings, and the requirement to make installments going forward, a lot of them are pushed out to September 1st or September 30th. And so a lot of you can preserve cash flow by stopping making your installment payments. So I'm going to zoom right over that. There is a complete list of all the filings on CRA's website, but also on our COVID site. Understand that those are also not just income tax deadlines, GST deadlines, PST, all the provincial taxes. If you've got a remittance, before you make it, see if there's a deferral on making that remittance out to September, because most likely there is. So the CERB program, I'm going to talk about some of the supports very briefly for individuals. There's basically the CERB program, which is the new program intended to get people away from the EI program and bridge them to that, which is a 3-month program. And then there's the traditional EI type programs that have already been in play. So the CERB program, it's a $500 a week subsidy that's intended to replace EI. So you will have seen a couple of other programs that got initially rolled out that were basically kiboshed and replaced by the CERB. So that you can ignore those 2 other programs that were in the original government announcements. But basically, anybody who has lost employment by virtue of the COVID crisis can access the CERB benefits. So it's important to understand that you've lost employment due to COVID. And so basically any employee that has been put on temporary leave or even terminated can apply for the CERB program, and it's a very, very rapid turnaround. I believe that they're operating on a 10-day turnaround. I think I saw you operating on a 10-day turnaround, and so you get a flat $500 a week rather than applying for EI. One thing to understand is that you have to lose employment by virtue of COVID. And so I've heard of circumstances where some minimum wage employees have figured out that maybe they are actually better off just claiming the CERB, and they're basically leaving their employment. And so, for example, if you're running a fast food restaurant and your employee says, you know what, I'm better off sitting at home playing Xbox than I am working here. If they leave the employment, they didn't leave because of COVID, and they may not be eligible for CERB. And on the record of employment, you actually have to identify that the person left voluntarily, and they may not actually access this. Because I've heard of instances where employees or employers are actually offering higher wages to keep people from just voluntarily walking away and going and sitting at home during this crisis. And so just be forewarned that you have to lose your employment by virtue of COVID, not just decide that you want to sit at home. One thing to understand, CERB is available to owner managers. And so if you're out of work, you can apply for CERB. And my understanding is, and I think it's in the Q&A, is that dividends will qualify under CERB. It's the one instance where dividends to owner managers are actually considered in the calculations. So if you've already got employees on EI, they don't get onto the CERB. If they've got applications in for EI that haven't been processed, don't apply for CERB because they're getting automatically kicked over to that program. And this program is open. It's up and running, and I've heard checks are actually hitting bank accounts already. So I think we've got some time now for some Q&A. I'm happy to stick around for as long as we want to answer questions. I did see some great questions in the Q&A or in the chat.
We do. Yeah.
So
hi, Philip.
so
I'll just jump in here and help moderate that Q&A for sure. But we'll start with Philippe's question first, since it's there. Is the 75% wage subsidy applicable only for payroll employees, or is it also allowed for contractors?
That's a good question. I don't believe that that it is qualified because it has to be employment income, I believe. I will double check that, but I am virtually certain that contractors are not part of that.
Because the contractor would fall under they would be able to claim the like revenue reduction and the inability to pay their employees. So effectively the sole proprietorship or the corporation that the contractor is employed through would have their own protection.
Yeah. Yes, thank you. And just to let you know that, yes, we've been asked this question a couple times. Will we get a copy of the presentation? Absolutely. You'll also get a PDF with all of the questions that are asked in the chat box and answers to all of those. So don't worry about that at all. We've had a couple questions about ROEs and what exactly are the codes that need to be put on with regard to the CERB specifically.
Yeah, and this isn't an issue because you do need to identify the correct codes to qualify, because you basically have to just suggest that the employee has been let go due to a lack of work. It's not if you have to tick the box that says it's a voluntary leave, like they're actually choosing to leave, they won't qualify for CERB.
Rebecca asked, we hire seasonal farm workers. Are they eligible for the CEWS?
CEWS. There was conversation about that because they would not have had wages previously, so they wouldn't have pre-existing wages, and of course you haven't started to pay them yet, and wondering whether you can actually get the seasonal the wage. If you actually employ them, you should be able to access the program, but you wouldn't be able to, I don't believe, do a temporary leave type scenario. I don't believe so, because they don't have pre-existing wages.
Okay. Another question about temporary foreign workers. It was recently stated funding of up to $1,500 for each TFW will be received to employers. Do either of you have any more information on that?
Yeah, that was in the announcements this morning, I believe. And so we're going to defer that question because it is a brand new pronouncement this morning. I think that was in Trudeau's press conference this morning. And it certainly hasn't been introduced as legislation yet.
It will be.
But it looked like there is going to be support.
That's good. Stay tuned. Going back to the top of the chat, Rock asked a few questions. Hey, Rock, in Summerland, I'm assuming. How you doing? Can I hire new employees to restart my business or to be better prepared when this pandemic is over? I'm assuming new employees that would then qualify for the wage subsidy.
Yeah, I'm assuming this is a 75% subsidy question. If you fit the qualification on the revenues and then looked at the calculation of the 75% subsidy, it's the greater of your current wage and the second calc, which is your pre-crisis wage. And so you would be, your current wages would qualify as long as you met the revenue test.
Fair enough. He asked that if you employed an individual under contract, so you brought in a contractor, that exceeded your $75,000 in payroll, can that contract fee be included to qualify for the program?
And that's again a 75% subsidy question, and that's where it's similar to the previous question, because that would be a contractor, not an employee, and then the contractor would be the one that needs to now go and claim that for himself as far as his lost income.
Thanks, Phil. This is a good one Helen Sampson asked, because the issue is raised in my own family. Can employees be brought back from a layoff and placed on vacation at full pay instead of a paid leave of absence if there's no work for them? Can they use vacation time for that purpose?
That's a good question. I mean, that's employment income, and if somebody's going to, you can bring somebody back to work, and if they're willing to use their vacation pay, their vacation days, and you're actually going to pay it, I suspect that would qualify. And again, I can clarify that as well And these are all the great questions that come out of this scenario where you've got a really vague kind of program, and of course everyone, all these questions are now being fed back to finance, and clarifications come on a daily basis.
I'll be sending these to you guys too,
But
so you can help us with the written answers as well. Yeah. Sounds good. Yes, go ahead.
Employer can determine when you're allowed to take vacation. So I think from a legislative perspective, just generally in employment law, the employer could say, you need to use up your vacation and then paid leave after your vacation is used. I believe that that's legislatively allowed for employers to do that. So they could definitely do the first part of it. And then as long as they're paying them, then it falls into the subsidy space.
Yep, sounds good. Shanna is asking, the paid leave option, if the owner manager has not been paying into EI, do they still qualify?
Well, the paid leave option is again under the 75% subsidy, and so that's not under the EI program. You would be bringing them back onto your payroll and saying, look, you're going to take paid leave. I'm going to continue to pay your salary at 75%, and you wouldn't be in the EI program. You'd be on payroll.
Yep, fair enough. Zim is asking, our company has not filed for taxes since we started in 2 years. Can we still apply for these benefits and subsidies? There's an onus on there, yeah.
I believe yes, with the caveat that CRA does have a policy of not releasing funds where you've got unfiled tax returns or GST returns. I would be shocked if they tried to apply that policy in this circumstance, because this is a federal support program. It's not an income tax liability or refund. But if you're looking for an accountant to help you out with those filings, we're here.
Exactly. For the wage subsidy, how would you calculate pre-crisis wages if wages from month to month were variable? Is there an average they would be asking for then, I guess?
Yeah, there is a formula that's in the legislation that gives you the methodology to calculate your pre-crisis wages, and I believe it looks at the pay periods leading up to this and averages them.
Okay. Rock's asking for a bit of clarification on the bank loan application. Can I include the contractor salaries to meet the $20,000 minimum?
Application forms, and they require you to certify that your payroll expense is within the thresholds that were set by the government, and also to enter the number from box 14 of your T4 sum. So contractor compensation would not be in that box, so you can't put it in there, and they are going to be doing spot audits and that kind of thing to check. EDC, I'm sure, will have access to the T4 sum information through CRA for corporations, so they can audit that. So I wouldn't recommend combining those. Okay.
Matthew asks, we have an...
Just a little,
go ahead. Go ahead.
Just a little clarity on the previous question on the wages. The pre-crisis wages, it's the average of the weekly eligible remuneration paid between January 1 to March 15th. And so the calendar year to date up to March 15th, it's an average.
Okay, fair enough. Jill, go ahead.
For the CEBA program, it says very generally that the requirement is that your company will have suffered a reduction in revenues. There is no criteria as to how much of a reduction in revenues your company has to have suffered. And when you look at the application forms, I actually haven't seen anything even requesting the applicant to certify that their company has suffered a reduction in revenues. It's really very broad strokes there of, are you impacted?
Yeah. So read between those lines, everybody. Exactly. Again, asking about the ROE codes. Does coding have to be medical for the CERB application? For example, if they don't have childcare, what code am I supposed to use?
Yeah, forgive me if I don't have the ROE codes committed to memory here, but I mean, there's a number of places where you can qualify. It doesn't have to be medical. It can be, you know, like they mentioned, childcare, or it could be that the employer just doesn't have the work for them because they've significantly got reduced business. So those, as long as it's a code that puts them out of work and you can support that it's a COVID related, I mean, the ROE on its own is not going to disqualify somebody unless it specifically states that somebody left of their own accord, like a voluntary leave.
And so there's also some new codes. If you go to Canada.ca under the ROE, they have some additional codes that I don't know how new they are, but some of them seem like maybe they're a little bit newer, like COVID new. So they have, you know, you could say shortage of work. There's employer bankruptcy or receivership, and there's health reasons, and there's also caring for a dependent. So it's not clear yet whether any of those would cause problems, and on the quit side of whether they would be eligible for the CERB. I think it's still evolving as to exactly what is required. I think the important thing is what Phil was saying earlier, is if you have employees who quit because they want to take the CERB versus taking your salary that you're willing to pay them, that would be one of the more voluntary options versus they are leaving for a reason due to your business. So I would probably stick with something like the shortage of work as the primary reason, because I would assume for most of these businesses that we're talking to, if COVID had not happened, these employees would still be employed.
Mm-hmm. Yeah, exactly. Thank you. Next. I believe Phil said employees who participate in a job sharing program remain eligible for EI. If an employee has already been on EI for the maximum of 13 weeks, does this mean that they would then be reliant on only the income they receive from the job sharing program?
That's entirely possible. They extended, like, normally you can't apply for the job share. There's limitations on going from EI to a job share and vice versa. But if you've already exhausted your EI qualification, the job sharing program may not get you the intended result where you can overlap EI and wages. Because if you've already exhausted your EI coverage, you wouldn't be able to qualify going forward for additional EI benefits. I suspect you'd have to look at one of the other programs.
Okay, fair enough. Thanks, Kylie, who put in some of the codes there on the chat box. So as you're looking at those, give a read. Thank you very much. I love how these forums work that way. If you've got an answer that's supportive, throw it up there too. Zhang has asked, is the CEBA based on each individual entity? And I don't want to assume, but would that mean individual companies if he has more than one company by the word entity?
Right. So the reading of it that I have done indicates to me that it's every organization that has a CRA number, effectively, would be. So if you have different registered entities with CRA, then you qualify. Each of those ones would be qualified. So it's not like some of the other ones where it's based on the associated group. If you have 10 companies that all have payroll of some amount, then you would get 40 for each company. So a great example would be if you had, 3 retail stores and each retail store was in its own corporate entity and each of them met the $20,000 threshold, you would get 40 times 3. If you have all 3 in one corporate entity, you only get the 40 once.
Okay.
But you can't change the structure now because it had to be in place before March 1st.
Okay, which throws a Trish's question up to the top. I was in the process of rebranding and incorporating when COVID broke out. My old business was scheduled to close today. My new incorporated business, banking, was opened after March 1st. So should I be applying for these assistances under the old business?
I think that would be one that would be really good to talk to your bank about, how they, like, you can do the online application, but I would call your relationship manager at the bank and ask them what they recommend, because they're going to understand that, look, it's really a continuation. And if there's a way to do it that would fall under the rules, but that is a very particular case. I can't really comment on how it would be applied in that situation.
Yeah, and if you're talking about the wage subsidy programs as well, there is an ability to look at your revenues and whatnot on a consolidated basis. And so you might be able to look at both entities together, apply for the new entity based on the revenues and of the old entity.
Fair enough. Trish also asked, can you purchase new equipment or do business upgrades with this loan?
Yes, you can. When I was speaking with the person from EDC yesterday, he said that that would be totally fine. I think the main thing is to make sure that, similar to when you're just generally getting loan financing for equipment, that you make sure that you're tying it to the expected life of the equipment and that it makes sense for the business. If you had already planned on getting some piece of equipment and you just can't finance it regularly, this is a great way of getting the financing that you would have otherwise been able to achieve pre-COVID, and do it that way. But just make sure that you're sort of tying it to the operational needs of the business and your ability to repay and that kind of thing, like you normally would.
Sounds good. Dejan asks, our small business is now closed. Can the owner use this fund to pay for the lease of the building?
The funds can be used for any non-deferrable expense of the business. So if you have a lease that, you know, your business can't operate, but your lease is still requires you to pay it, you can use it to pay that.
And I might add there that this morning, in the announcements this morning, Trudeau did announce support for rental, commercial rents as well. And
so it's called
specific funding.
Yeah, it's called the Canada Emergency Rent Assistance Program. It is not in effect yet. They are talking about calling Parliament on Monday, possibly, but apparently they're negotiating over whether they have to be in person or they can do an online face-to-face vote of some sort. It will cover rent or provide a subsidy of some amount. It's still completely unknown as to what amount that would be for April, May, and June for commercial leases.
Okay. Tiffany has a question, and I'll get to Lily's in a second. Tiff has a question for Phil. I'm interested in knowing the steps or process on how to go about claiming the 10%. My understanding is that it's done when putting payroll information together. Since I've never done payroll, it's a bit of a mystery for me. So what I'd like to be able to provide to the client is a how-to guide. Would this be something that they should be talking to their accountant about and or their accounting software provider?
It won't be an accounting software provider, but depending on the size of the payroll, the calculation is reasonably straightforward. And there are some calculators out there that I've seen. I know our firm has built a calculation spreadsheet for this. It is for a small payroll, it's reasonably straightforward. It's just 10% of your gross wages. And you withhold that out of your income tax withheld, and you just short remit on your payroll, and so it's not that complicated, but there are some nuances to it. I mean, there's obviously caps to it, and you can't create payroll to access this as well. You can't generate a new payroll to an individual. This is the owner manager exception, and I think there's a question about the arm's length nature, and so if you've got family that are related family members that you try to put on payroll, they are specifically excluded from accessing that 10%.
Okay, sounds good. Lily's asking, when does the 75% wage subsidy kick in? It doesn't yet seem to be available to apply for on the CRA website.
No, it's not. The announcement the other day when they rolled out the legislation that it'll be 2 to 5 weeks. So I would bank on 5, hope for 2. They don't have it up and running yet, but they've committed to having it up within 5 weeks. So that's where the time frame, the cash flow is. You're going to have the cash outflow before you see the rebates.
Another great question. What if an employer is willing to give someone their time off? Hang on, just flipped. Give an employee 3 days of work instead of 5, so the job share, but she doesn't want it and prefers to go on EI. Do you have to get her to sign some kind of letter refusing the 3 days and issue an ROE as shortage of work or a quit?
Probably a labor law question, that is, because that's whether or not somebody's left their employment voluntarily or you've offered them a 3-day work week rather than a 5, which may be a constructive dismissal situation. So not being a lawyer, I don't know that I can answer that question.
Jocelyn, if you want, I can refer you to several of the law firms that are members of BC Food and Beverage to have that question answered directly. And I'll also do that referral to get these questions answered as promised in the PDF. Okay, Brenna, we've got a couple more minutes for questions and then we're going to wrap it up. If an employee is sick, should they apply for EI or CERB? Also, if an employee is on STD due to COVID, there's a 7-day unpaid waiting period. Can they apply for EI or CERB during this time period?
I would believe so, but you do need a 14-day period of unemployment before you can apply. And so I guess that's a tricky thing to understand as to whether or not that's going to be 14 days. So you can't apply until you've had 14 unpaid days.
Yeah, exactly.
Yeah, maybe just a little clarity. I just had thinking through the previous question on a reduced work week. One alternative, and again, I'm not a lawyer, one alternative is to offer a reduced work week or allow them to elect to go off fully, like as part of your work reduction plan. Because I've seen that strategy in play where you basically say, look, we're going to offer a bunch of people 50% reductions, but if it works better for you to go down to 100%, and that's part of the rollout of your work reduction, you might be able to avoid having any kind of constructive dismissal scenarios. So it's the person it's part of your policy.
Okay.
To offer the reduced to 0.
One of the last questions from Zim, interesting situation. Can you apply for CERB if you were offered a job, but due to COVID, the offer was put on hold? Interesting. Can the employer help in that way?
I suspect the answer to that is no, unless you've got some pre-COVID earnings. Because you have to have had earnings prior to qualify, and it's not a lot, it's $5,000. But if you were unemployed and you've got a new employer, I don't believe that you've had income from that employer to qualify for the CERB. I haven't seen that question before.
It is interesting. Question, EI sickness benefits still exist, or is it taken over by CERB? I'm sure other people are, despite the crisis, are sick with other illnesses.
No, that program is still in play, and that's a pre-existing program that hasn't gone away. So, similar to the work share program.
Okay, wonderful. I think we have asked all the questions. No, I got one more from Philippe. For the 75% wage subsidy, what if a company does not meet the 15% in March, but meets the criteria in April or May? We might have gone over that. Yeah.
That's a good question. I did gloss over that. So the initial qualification, if you qualify in April at the 15, you automatically actually apply for the next month, and you reapply every month thereafter. And so if you do the calculation for April and you're not there, and then redo it for March, or sorry, for April and or May, and you do qualify, you can get on it. So that's why you apply for it every single month.
One more question. Tamara is asking, as a sole proprietorship with no payroll, as I'm the only worker, what are some resources? So sole proprietor on her own, what's there for her?
Most of these resources are available for self-employed individuals.
All right, fantastic.
Yeah.
I'd like to thank you both, obviously, for coming on. I know James is going to speak to us as well with a couple of wrap-up updates. Thank you. The question was asked about Granted. Who are they and what are they doing? Obviously, give Grant Thornton a call. We'll send your guys' contact information out as well. Specifically with to grants and funding, Granted is one of the other BC Food and Beverage members who is offering a number of services related to figuring all of that out. I've posted it there on the chat box that you can connect with them as well. They're also offering free consulting resources to help you plan a strategy around your immediate needs as well. So I love it when all of our members get together and offer services and support. And Grant Thornton, thank you very much. You're definitely one of those for sure, as is Granted. We just really appreciate it. I'll say goodbye. James is going to come on. I have to shut my camera off, but appreciate everything that you guys have contributed. Lots of questions. Over 200 attendees on the webinar. So thank you all and have a great day. And as always, to our members, if you need us, give me a call. Give us a call, send an email.
Yeah, and thanks so much to Laura and Phil and Grant Thornton for providing all this information. Really, really helpful. It's a lot of content, and as Tanya already mentioned, we'll be providing that on our website, so you'll have access to it. Really important we keep the lines of communication open. So if you're if you're needing anything from us, please feel free to reach out. That's what we're here for. This content's been really useful for you. No announcement yet about next week town hall theme, so we've got to finalize a few things before we can make that announcement. So look for that very soon. And I mentioned at the opening, our BC Food and Beverage Awards nominations is going to be opening on April 21st. And thank you very much, Sandra. And our wage survey is also going to be available now too. I think Sandra will probably pop up a notification on that. More information, of course, on both on our website. And obviously, we'll continue to keep our COVID site updated with any new developments or government programs. So thanks again to all of you for participating. Special thanks to Grant Thornton as well. And take care, and we'll talk to everybody soon. Thank you again.